Uh, Good evening, everyone. It's a pleasure to invite the team here, and I'm happy to see the panelist on the screen. I would like to welcome everybody to the session for Audit Trail, and I would like to hand over the session to Babita to and I would like to introduce our Vice President of KSCA, Sujata Raghuram. She is one of our inspiring women and empowerment committee and our inspiration for taking us towards a vision where women has been always given a always given a stand up from the normal routine and to make their place. So I would just pass on to Babita. Babita, you can take over from.
Good evening, everyone. Change is the only constant, and our profession is no exception to this. Every day we are faced with lot of changes, and introduction of audit trail is one such change that we really need to equip ourselves with. And KSCA has been a pioneer in enriching our knowledge with useful information and webinars. And today's webinar is one such initiative taken by KSCA. I extend a warm welcome to CA Anup Thomas and thank him for taking up this session. I really look forward to this session, and I would request Sujata to address all the participants.
Thank you, Babita. Thank you, Lina, for your kind words. And I also welcome CA Anup Thomas for accepting our invite and addressing our gathering. First and foremost is that coming to this topic, this is something very important because it was introduced in the year 2021. MCA announced it mandatory sometime in the March 2021, and we expected it to come from 2021, and it got deferred to 22. Then we expected it to come from 22. Then luckily now we are on track now. So it has been made mandatory from 1/4/2023. So when it comes to the topic, I think we have an excellent speaker who's going to guide us through the rule and auditor's rule basically. And this is going to be this rule in particular is going to cast a humongous responsibility on the auditors in two ways, I should say. One, as an auditor towards the end of the year. And as an auditor, it's our duty to create awareness among our own auditees and inform the client that yes, this rule has been mandated from this year, and you are required to update your software and keep the audit trail. Because as an auditor, towards the end of the year, if we report, which is mandated by the Rule 11G, and the auditee also may feel that yes, we are giving a qualification. So it is a humongous responsibility on the auditors. And also in a way, wherever we are taking up accounting role, as not as a chartered accountant, but as a accounting assignments whenever we are taking, it is our paramount responsibility to ensure that we follow the audit trail and we don't tamper with any of this, because now in the current scenario, the business frauds are majorly happening based on the accounting principles and tampering of books of accounts. So I should congratulate our Women Empowerment Committee Chairperson Babita for taking up this very important topic, and she was very keen in creating awareness among our members. And also the Institute has come out with a guidance note. I think we have to read it verbatim and follow in our day-to-day practice, not only at the year end, but even in between the year. If we feel that some of the clients have not followed it, it is time for us to create awareness among our own professional friends and the auditees. So with this note, I would like to hand over the session to Babita and the speaker in particular, who has got a great amount of experience and expertise in this field. Over to Babita. Thank you.
Babita, you're mute.
Thank you, Sujata. Lina, I would want you to introduce the speaker and then start the session.
Yeah. I I would like to give a small brief introduction of the speaker, CA Anup Thomas. Anup Thomas is an associate director with Grant Thornton Bharat. He's a chartered accountant with 13 plus years of experience and partners with organizations to enhance their enterprise value. Anup collaborates with organizations to manage risk and enhance control environment through process transformation, simplification, and automation. Anup has a vast experience in managing projects using agile principles to provide risk advisory services, including internal audits, enterprise risk management, business process transformation, and setup of control governance frameworks. Prior to rejoining Grant Thornton, Anup has worked with large professional services firms, has experience in industry, and was part of a team in Global Captive Center managing the rebate audit operations. Anup has led complex and global audits by collaborating with various functions such as business operations, risk management, compliance, legal, anti-money laundering to plan and execute audits. His expertise of risk advisory services covers industries such as pharma, life sciences, staffing, education, real estate, IT, and manufacturing. And he collaborates with startups to set up their control governance frameworks. And with this brief introductions, I would like to hand over the session to Anup to throw his light on all the analysis with regard to audit trail and which our attendees would love to listen to. I hand over the session to Anup, and I would just like to update the attendees. We will have question answers. We have a question answer panel where you can post your questions, and that would be answered at the end of the session so that the speaker gets ample time for deliberating his session and it doesn't interrupt his flow. And we also get the knowledge flow easily. Yeah. Thank you, Anup. And thank you, KSCA and Women Empowerment Committee for organizing such a beautiful session. And we look forward to hear from Anup now. I hand over the session to you, Anup.
Yeah. Thank you so much. Thank you, Sujata ma'am, Babita ma'am. Thank you, Lena, for the wonderful introduction. I welcome all the participants to this session. I'm very grateful that you have taken 45 minutes, 1 hour of your life to spend with us because this is an important topic. As Babita ma'am said, change is the only thing constant. And the nation and our Prime Minister always cast this great responsibility on chartered accountants to become the torch bearers of financial literacy and financial transformation within the country. So we as professionals work at the grassroots level. When I say grassroots level, we are working with companies, we are working with clients, we are working with individuals. If we transform that, we are transforming our nation. So it becomes important that we look at this change that has been brought about by the Ministry of Corporate Affairs as an opportunity and have a mindset. How can we collaborate among our clients, among our professional colleagues to make this a successful change that the government has brought in? I have a presentation to share, so I'll just quickly share my screen and then we can go ahead with the presentation. Just let me know when you can see my screen. Lena, you can help me with that. Let me know if you can see my screen.
Yes, so we can see.
Yeah, thank you. So I have titled this conversation as Audit Trail towards greater transparency and accountability. The objective with which the regulator has brought in Audit Trail in the ERP is to bring in greater accountability, greater transparency, and restore confidence or enhance the confidence in the economy when we face the global world. Right? That's the primary objective. And we need to acknowledge that, yes, there are opportunities for us to contribute in this particular area. So we'll start with a quick poll. What I request you is, if you have your phones, please take that phone. Just go to your web browser and type in Slido, slido.com. This is the web page that you need to type in. Or if you do not want to type in, I will share a QR scanner. You can just scan and you can give the responses there. It's a simple poll to get the sense of the audience. And then once you get into this page, which is slido.com, there it will ask you enter a code. So just enter this code, 1477307. Once you enter that code, you will be able to come to the poll. So I'm just going to the poll. If you have any questions, happy to take that. So this is the this is like a website which helps us to capture some of the information related to the poll. So if you have your mobile, you can just scan this code, or you can just type in slido.com and put in the code that is required. I'll just wait for 1 minute so that all of you can just reach this stage. Either scan and wait, or type slido.com in your web page and then put in the code 1477307. I'll just give about 30 seconds before we move to the poll. Yeah. Again, I'll just repeat the instruction once. Scan the QR code and wait, or type slido.com in your web browser on the phone and type in the code 1477307. Okay. Just let me know if you see the screen. If you see the screen, just respond. It's a simple poll. It asks.
Yes, sir. We are able to see this.
Yeah.
Screen
So just
enough. Yeah.
Yeah. So Gauri, welcome to the webinar. Leena, welcome. Dinesh, welcome. Gaurav, Vipin, welcome. Nipura, Umesh, welcome to Babita, welcome. Good, good. So I can see that I have at least 24, 25, 26, okay. About 24, 25, yes. I'll just give this all a minute so that I have at least 50% of the participants who can join in, so that I get a sense of the team. So Dinesh, welcome. I have 28 members, participants who have been able to join this. 29. I'll give another 30 seconds if there are any others who are willing to participate. It is simple. If you have just joined, scan this particular code which is visible on the screen. And then, okay, somebody has typed in the code. Good. Yeah, so I'll move on to the next next question. Okay, I have a question. I'll come back to the question at a later point in time. Yeah, what is the number of years of experience that you have as a professional? Simple question, years of experience. Okay, I have 23 years, 35 years. Amazing. I think some of you have the experience of my age. Okay, great. 4 years, 12 plus, 6, 12, great, 35, 10, 15, 20, 12, amazing, 17, 16, 4. So can you see the power of the experience that we have in this webinar? We have people with 32 years, 35 years experience who can contribute to the profession. Amazing, amazing. We'll go to the next question. Simple question, audit trail. What is audit trail? There are 4 options. You can read it and respond. what is audit trail? When you hear audit trail, what comes to your mind? Okay, day-to-day trail. Okay. Okay, trail the auditor leaves when auditing. That's an answer. End-to-end record of transactions. Okay, I have 67 of you, 63, 64%. Okay, good. I have 26 responses, 28 responses. 61 of you are saying that end-to-end record of transactions. Okay, good. Okay, great. This is an important question. Is audit trail beneficial or is it a challenge? How do we see? 50-50. Great. Beneficial. Okay, beneficial. 67% say beneficial. 65, 67, 69. Okay, so I have about 35 participants have responded, and 40 have responded, and 73% of you feel that it's beneficial. 28% feel that it's a challenge. Okay, we'll discuss this aspects. Okay, great. There is one question. I'll just make a note. Is this audit trail to be activated in all software which the software client uses? Okay, I'll come to that. I'll give that answer in the presentation. Okay. Now we've done with this. So what we'll discuss today is what is audit trail, the regulatory context, and the intent with which the regulator has taken up this audit trail becoming mandatory. Management responsibility. If we are playing the role of a management, what is our responsibility? If we are assisting our clients, what is the responsibility that we can collaborate with our clients with respect to audit trail? What is the auditor's responsibility? Some illustrative scenarios and some of the key considerations as we navigate through the audit trail, its implementation, and the overall adherence to the requirements of the regulation. First, we'll discuss a little bit of audit trail. Audit trail is a document, is a documented record which covers sequential activities being performed for a particular transaction. It can be financial, it can be operational. Here, when I'm defining audit trail, I'm not referring to the regulation. This is the general definition. So that's the reason I mentioned financial and operational, because audit trail is very important. If we can enable it both for financial and operational, it'll be of great use. What it needs to capture is date, time, who has performed the transaction. This is very important to be captured in the audit trail. This becomes the attributes of the audit trail. And why is it important? Because it helps in identifying who has performed this particular transaction, ensuring there is traceability of the entire transaction from beginning to the end, and we can hold a particular person responsible for the transaction and for the activities being performed on that particular transaction. Third one is end-to-end secure transaction record. Audit trail ensures that it's a record which is secure, which covers initiation of the transaction, review of the transaction, approval, authorization, modification, update. It also captures what was the source document based on which the transaction was carried out and the supporting documents. Is audit trail beneficial? Yes, because it provides good internal control. It enhances the stakeholder confidence and it brings in accountability. Today, if transactions, if there is some errors, omissions, if there is frauds that are committed, it becomes very difficult to identify who has committed the fraud and hold them accountable. So audit trail enables that. It also enhances the corporate governance. It improves the trust and also will enable the organizations to grow because the stakeholders will start trusting the organization. Stakeholders will have more confidence and that will bring in more growth to the organization, right? Yeah. And moving on to the regulatory context, I'm not going to spend much time. Everybody is aware that as per the Companies Act, the auditors are required to report in their audit committee on certain matters. It also the Companies Act puts that additional responsibility of specific matters being reported, which may be prescribed as and when the regulator feels that there is a reporting that is required from the auditor. And all the specific matters are covered in the company's audit and auditors rules. And Rule 11 specifically talks about the matters which needs to be reported by the auditor as and when the regulator notifies these regulations. And one of the key regulations that have come about is the audit trail. And this is the specific rule which talks about the importance of audit trail, what the auditor needs to report, right? So the requirement is that any company which is using an accounting software, the words are very clear. It is accounting software for maintaining its books of accounts. So just keep in mind, it's an accounting software, books of accounts. These are the two key words, right? We will discuss these as we go along. What it needs to have. There are 4 specific items that the regulator has called out. One is it needs to have the capability to record audit trails, including the edit log. So if I'm editing something, even that activity has to be logged in the software. Second, this audit trail feature has to be operated throughout the year and for all the transactions that have been recorded in the software. When the regulator refers to software, it is the accounting software, right? And the trail, the audit trail, whatever has been recorded, should not be tampered with. And finally, the audit trail has to be preserved, retained as per the regulatory requirement for record retention. So these are the 4 aspects that needs to be there in any accounting software which is used for maintaining of books of accounts. The question was, should the company have audit trail enabled for all its software? The answer is no. It is required for accounting softwares and for transactions that gets affected into the books of accounts. So this is the ambit of audit trail as specifically for this regulation. However, as a professional, it is always advised that we enable audit trail depending on the criticality of the transactions in these softwares that are being used by the company. That's a good to have, depending on the cost of data, cost of maintaining the databases. Okay, moving on to the next aspect, which is the management responsibility. What can the management do? One is, as professionals, if we are playing the role of the management or advising the management with regards to accounting, with regards to bookkeeping, with regards to maintaining of software, it's important that we educate them right now because the regulation has come into effect now, and the reporting will start for this particular financial year. So it's important that we start educating our clients on the need for either selecting the appropriate accounting software if they want to go ahead with accounting their or maintaining their books of accounts in a digital form or in a software. If they are intending to do that, they need to ensure that audit trail exists in those software. Second, if they are already using a software, we need to review and ensure that the audit trails are enabled and also help and work with them and collaborate them in enhancing all the internal controls related to audit trails. This is an important aspect. The more we communicate with the client, the more we educate, the more we enable them, they will be able to adhere to the rules that have been given by the regulator. What it does, This also enhances user accountability within the organization. When we educate our clients telling that there is an audit trail that needs to be enabled, the users also need to be educated about the audit trail being there, which will increase the accountability culture within the organization. Optimize and automate processes. If the client is having manual processes today, and if the accounting software is being implemented to adhere to this particular requirement, we can work with the clients to optimize and automate their processes to bring in efficiencies. These are all ways how we can collaborate with our clients and bring in the change that the regulator is looking for. There are three opportunities that are at hand for an organization when it goes in for adhering to this particular regulation of audit trail. One, if they are already using an accounting software on an ERP, they can review their existing ERP to ensure that audit trails are enabled. If they feel that it is not sufficient, they can invest in new ERPs. Again, depending on the size of the client, depending on the need of the client, these can vary. Second, if it's a process driven organization, we can evaluate the processes that are already being put in place, enhance these processes to adhere to the requirements of audit trail being maintained in the system. Third one is look at the overall control environment. That is, who is initiating the transaction, who is reviewing, who is authorizing, who is approving, whether all these activities are getting tracked in my software or not. That can be reviewed and enhanced through this particular adoption when we are adopting the regulation. Right? The next one is the auditor's responsibility. So if we are the auditors of books of accounts of our clients, what responsibility is casted upon us, and how we can discharge our responsibility is what we'll discuss now. One is there is a reporting on audit trail by making a specific assertion in the audit report, and the section is report on other legal and regulatory requirement in the financial statement. So that's where we need to make the specific assertion. And what are the assertions that we need to test? We need to test on the audit trail being configured, whether they have configured the audit trail or not. Second, the audit trail feature is enabled or operated throughout the year. So we can't go to the client at the end of the year, which is when we close the financials, go and tell them, sir, your audit software did not have audit trail and I need to report it. Then it will not be the right thing that we'll be doing as a professional to our clients. So it's important that we educate them right now, immediately telling that your audit software needs to have an audit trail. If it is not there, either upgrade the software or change the accounting software itself. Yeah. Third is all transactions are covered with the audit trail feature. That's the third aspect that we need to report on. And the fourth aspect is audit trail has been preserved as per the statutory requirements. Now, all transactions, what does it all transactions mean? Here, all transactions means any changes or any transaction that results in a change in the books of accounts. So any transactions that are passed, which changes the financial position of the company, needs to have an audit trail. Yeah, we'll come to that. We'll come to specific scenarios and discuss it in a little more detail when we go through the scenarios. Applicability of this rule, it's prospective, it's going forward, it's not retrospective. So it's an opportunity for us to implement the audit trail going forward. Does it apply to all companies? Yes, all companies, including Section 8 and foreign companies. So there is no exclusion. We have to ensure that if there is an accounting software that is used, it needs to have an audit trail. It is applicable for all records which are maintained in electronic form, and if then accounting software is used. If it is a manual, if the books of accounts are maintained manually in an Excel workbook or a Google Sheet, then the auditor needs to report it as a statement of fact against the audit trail clause, against Rule 11G, telling that the company does not have an audit accounting software and the accounting books of accounts are maintained manually. So that is the statement of fact that needs to be called out. If an accounting software is used, then depending on the testing procedures that are performed, the auditor has to report on the 4 attributes that we have discussed here. It's applicable both for standalone and consolidated financial statements. If we are relying on the auditors of subsidiaries, joint ventures, other companies, we can rely on the audit performed by them. However, we need to apply professional judgment. So this is on the applicability and auditor's responsibility. Now moving on to the next aspect, how do we approach the audit? Because this is the first time that we would be doing an audit, and how do we go about auditing the audit trail? This is the flow. First, we need to understand what are all the records and transactions that affect the books of accounts. This is the starting point to know what all transactions either are accounted in the books of accounts or are resulting in the change of books of accounts. What is the whole ERP or accounting software and its environment? When we say its environment, it typically covers your accounting software, the database, any kind of interfaces that are there between one software and the other. All of this gets covered. We need to know the list of the softwares. See if the audit trail is enabled, not if the audit trail exists within the accounting software and the overall IT environment where the accounting software is hosted. Identify what are all the key attributes that needs to be there within the audit trail, which is primarily the time, the date, the user who has carried out that particular transaction. Certain accounting software also has the capability to store the source document or the source data that was used for creating that particular transaction. So all of these attributes needs to be audited. Key thing that you need to look for is whether the audit trail was enabled throughout the audit period. If it is disabled, we need to understand who can disable it, why was it disabled, and what was the period for it was disabled, and the justification for disabling it, and what changes have happened or what accounting entries have happened during that period when the audit trail was disabled. However, it is always advised to have the audit trail enabled for the accounting software. The next thing that needs to be checked is, can the audit trail be modified? Whether it can be modified. If yes, who can modify it? What is the reason for modification has to be audited. The last aspect is, can the audit trail be deleted or can it be destroyed? As per the regulatory requirement, it needs to be retained for 8 years. Right? That's the current statutory requirements for record retention. So is it being retained for so many years? So this is the audit approach that needs to be followed. Yeah. Moving on to the next aspect, we look at some of the illustrative scenarios that we encounter on a day-to-day basis, and what is the requirement? How do we address it? Right. Before that, this is what is very critical for us to ascertain whether an audit trail is required or not. Audit trail is required for accounting softwares which are used for maintaining the books of accounts. And when when the regulator says books of accounts, there are 5 clear aspects that has been called out. One is any transactions where money is received or expended, any receipts and expenditure, sale and purchase of goods and services, assets and liabilities, and items of cost. So these are the transactions, or these are the activities that constitute books of accounts. Any transactions which has these attributes are covered under books of accounts. Now let's look at the typical scenarios and where the audit trail needs to be there, and how do we need to report in case we come across any deficiencies or any challenges. First, so I've listed down 3 or 4 scenarios. After this discussion, we will discuss any other scenarios that you may have in your mind. We can discuss and then understand how do we need to go about. The key principle rule that needs to be kept in mind is that transaction affecting my books of accounts? If yes, audit trail has to be enabled, and it needs to be enabled throughout the year. If no, it is optional for the company to enable it or not, right? But all transactions which impact the books of accounts, there has to be an audit trail. So let's take the first scenario, manual accounting. That means I don't have an accounting software. I'm just using Excel sheets and Google spreadsheets to maintain my books of accounts. Auditor needs to report it as a statement of fact against the audit trail clause, because here we will not be able to maintain any kind of audit trail. So that's the first scenario. The second scenario, accounting is happening in ERP. Accounting is happening in ERP. Audit trail is required. Exceptions, whether it is not enabled, partially enabled only for certain modules, these needs to be reported in the audit report. So this is the second scenario. Third scenario, manual invoicing is happening outside the accounting ERP. Invoicing, sales is transactions affecting my books of accounts. So the auditor needs to report statement of fact, and any exceptions that have been noted in ERP has to be covered. So if, say, example, if the client is using a software or is just using an Excel sheet to create invoices, those invoices, when accounted in the accounting software, should have the audit trail enabled. However, creation of the invoice, the auditor has to mention that invoicing is a manual activity outside the accounting software in the as a statement of fact when the audit report is prepared. The next aspect, ERP used for invoicing. So there is a standalone ERP or an application which is used for invoicing. The transactions are auto ported or is moved from the invoicing ERP to the accounting ERP. Then the auditor has to report if there are any exceptions of audit trail in the ERP used for invoicing, as well as the exceptions noted in auto porting. That means automatically the transactions coming into the ERP, and also any exceptions in the accounting ERP with regards to audit trail. So example, there are say 100 invoices that have been created by the company. At the end of the day, these 100 invoices, a consolidated entry gets accounted in the books of accounts. So one, audit trail needs to be enabled for the invoicing, each and every invoice that is being created. Second, when the transaction consolidated entry is posted, the time, the date, who posts that entry, that needs to be logged as an audit trail. And the accounting entry, in case there is a manual or a system related accounting entry that gets passed, the audit trail for those, that accounting entry also needs to be created, or audit trail has to be maintained. Next aspect, manual fixed asset register. Many of the companies do not use the fixed asset module, and most of the fixed asset registers are manual. Fixed assets have an impact on the books of accounts. Hence, maintaining of fixed asset register has to be reported as a statement of fact when in the audit report. Manual inventory records. I have inventory, but I'm not using any ERP. I'm maintaining the inventory. Again, those also has to be reported as statement of fact. There have been a lot of queries around creation of employee code, vendor code, customer code, material code. Does this also need to have audit trail? This does not require an audit trail, because just by creating an employee or a vendor or a customer in the ERP does not affect my books of accounts until and unless a transaction has been accounted against these codes. So that is the reason creation of employee, vendor, customer, material does not warrant a audit trail as per the regulation. However, as per the good practices, it's always good to have audit trail enabled for any activities that are being performed in the ERP. The more the better. So the more the audit trail, the better for the organization. Some of the key considerations that we as a professional need to have when we work with our clients is one is helping our clients with ERP evaluation and upgradation to ensure that they are complying with the audit trail requirements. Enhance the internal control, take these opportunities to educate our clients, educate our professional colleagues that audit trail is an important internal control, which brings in a lot of accountability, and work with them to enhance the existing internal controls. Collaborate with auditors, service providers to see how they can also enhance their solutions to comply with the requirements of audit trail. Overall, as professionals, we need to ensure that we bring in more accountability and transparency into the books of accounts and the financial statements, because many of the stakeholders rely on us and our work and our professionalism to provide a lot of services, a lot of credit, a lot of work for the companies that we audit. So it's an opportunity to enhance the culture of accountability and transparency. And this is an opportunity for us to act as a catalyst, act as a important move to change the existing accounting practices of bookkeeping. So that's a very good opportunity that we have, and how do we capitalize this will enhance the confidence that the stakeholders place on our profession. So it becomes key that we advocate these changes and ensure that we bring in accountability and transparency. And as I mentioned in the beginning, the objective of this from the regulator is to move towards greater transparency, greater accountability, and greater confidence among stakeholders, not just within our country, but even globally. Now, the global world or other countries are looking at India as the economy is growing. The more confidence that we can build into the books of accounts, the financial transactions, the profession, the more better it is for us as professionals, as individuals, and it will benefit the whole country. So this is what I had to share. I'm open for any questions. Okay, there's one question. Are we saying that if manual books of accounts are maintained, there is no audit trail? For someone who has been practicing on the other, now I find it difficult to accept. Electronic trail, to my mind, is only one such audit trail. Yeah, agree. I agree with you. So Umesh, yeah.
Yes, sir, please.
So when we say that manual books of accounts are maintained, the audit trail is always there. It is there as part of the documents that are created and filed within the files that are being maintained. So audit trail has always been there. Now with companies moving into digital ways of or electronic ways of maintaining books of accounts, it becomes important that the audit trail, which was manually maintained in books, files with manual signatures, moves into an electronic form. So it is primarily digitizing the trails that we had, which was manual signatures, into a digital form, which is primarily capturing the username, the time, and the date when the transactions were performed. Audit trail has always been there.
Sir, is there anything to do with the period within which the transactions have to be entered? Can a company adopt annual accounting practice if it is a very small company?
Just a second.
One slide.
Yeah. Yes, when the accounting is done, that's when the transactions needs to be recorded in the books of accounts. So if it is one-time bookkeeping that we are doing, it is preferable to do it throughout the year and maintain the books of accounts. Otherwise, it's good to not have it in the software and run and maintain it manually.
Sir, next question. If manual records do provide audit trail, then why is a statement of fact required to be made in the auditor report in such cases? Why not state that there is an audit trail?
That's the requirement of the regulator, where the regulation is clear that we need to make the statement of fact how the books of accounts have been recorded for this particular clause 11G.
So we have a question. I think it is regarding if there is no business transaction, only some expenses need to be booked, like ROC audit fees. Client has maintained books of account manually. What are the consequences?
Even these expenses, right? Even the expenses can be maintained manually. There is no accounting software that is required for maintaining of these expenses. And then it needs to be reported as a statement of fact.
That we are not maintaining electronically the record.
Yes, yes. Again, the statement of fact is not a qualification, right? It's the auditor's way of pointing it out, telling that the company is maintaining its books of accounts in a manual form. If you have an exception, say example, if the company is using an accounting software for books of accounts, and then if we have exceptions, it has to be clearly called out. Exceptions are 4: whether it is enabled throughout the year, feature is available, has it been retained, and has the audit trail been tampered upon.
Can we go to the next question? How to deal with clerical mistakes or so-called typo errors? Even single zero makes huge difference. Audit trail gets filled with such correction made.
Yes. So it is important. Typically, if it's an accounting software, these kind of clerical errors are captured at the time of input itself. Example, there is an initiator of the transaction, there is a reviewer and an approver within the accounting software. If it misses everything, then it has to be through a rectification entry, and that rectification entry also will have an audit trail. Yeah. So typically these accounting softwares, will have controls telling that there is a review input, there is a review, and then there is an approval. All three, if by oversight, if they miss a zero, then nothing can be done, right? However, audit software also gives you indication. Say, example, if there is a significant change, movement in the balance, it will highlight telling that, okay, there is a movement, that when you pull up certain MIS or certain reports. So that's how you will be able to identify if accounting is done through a software.
We have one more question where in smaller company, there is effective internal control and controlled and managed by one person. In this case, there is no privilege control like maker checker concept. In this, how audit trail works and what is the responsibility of an auditor to report?
Yeah. So where smaller companies are there and where the maker checker concept cannot be implemented, the regulation or the requirement does not say that there has to be a maker checker. It says the transaction should have an audit trail, right? If the transaction is directly posted by one single person, the details of that particular transaction, which is the date, the time, and the user, has to be captured.
What is the impact if the small company make entries once in a month or so? So
if the accounting entry is only for a month, so example, I am incurring a monthly expense, right? Then I will account only that particular transaction, and all the workings related to that, I will have it outside of my system.
देख internet कोई किधर कोई?
Hope that answers.
Okay. Would there be an issue if the one-time accounting is done? Same question, done in April after the end of financial year. Does that imply that the audit trail has not been maintained and thus we have to give a statement of fact?
So here the question is, do we want to use an accounting software just for one time bookkeeping, or is it good to have it manually and then mention that if the accounts was maintained manually? Because if the moment you use an accounting software, the audit trail comes into picture, and for that particular year-end accounting, audit trail has to be there, and all the workings or all the data related to that particular period, there wouldn't be audit trail. So it becomes a combination of manual books of accounts and audit trail being available for that particular month. So instead of complicating it, it would be good to have it outside itself.
Sir, on this question, what was asked for small company, I just have this thing. I think the attendee wants to say that the software has been updated. They send the person who does the entries only once in a month.
Yeah.
I think he's trying to say in that sense.
Yeah.
So in that case, how would the thing happen? Because they're going to post the entries. That date would be showing that they posted on this date, but the transaction date would be as per the bill or the bank statement or whatever.
Correct. So there, the way the audit report needs to come out is telling that the accounting, the transactions are maintained manually. However, monthly accounting and book closure is being carried out where audit trails are available.
Sir, anything to bear in mind? Many of us are also into bookkeeping for companies. So would you like to, is there anything that you want to say about this? Any suggestion?
Yeah. So if there is an accounting software, we need to educate the client to use that accounting software for accounting. If the client cannot afford the accounting software, it's always good to have the books of accounts manually maintained and give the statement of fact as per the requirements of the regulation.
No, what I meant is most of us carry on bookkeeping activities also. So many a times we do it in our office. So any suggestion on this?
The location
Just
of
maintain the audit trail and carry on.
Yes, yes. The location of the accounting software has no relevance, right?
Okay.
Even though the transaction might be happening in Bangalore, the accounting can happen in Mysore or maybe even outside Bangalore. Anywhere, it does not matter, right? The crux of the matter is that if there is an accounting software, the audit trail has to be enabled, irrespective of where the accounting software is or where the accounting is happening.
So another question, what if the auditor after verifying the account suggests for some provisions to be made, example, provision of CSR, gratuity, etc. So this is the question.
Yeah, so even when we are making the making those transactions, audit trail has to be enabled. Whether it is after verifying the accounts, you still have to pass the accounting entries, right? When you pass the accounting entries, the audit trail has to be enabled.
So we have a question where what would there be an issue if one-time accounting is done in April after the end of the financial year? Does that imply that the audit trail has not been maintained? And does we have to give a statement of fact?
Yes. So it has to be a statement of fact, right? Telling that the accounting has been manual, right? Now, why do we need to do the accounting in an accounting software at the end of the year? That becomes the question. Do we need, or can we maintain it manually and prepare the financial statements and have a statement of fact mentioned in the audit report? Right? You are maintaining the books of accounts for the whole year in either Excel workbook or in files, just for preparing a trial balance, a profit and loss account, a financial statement. If you are using accounting software, right, it still tantamounts to maintaining the books of accounts manually. Right? Only thing you're doing is putting it into an application which is giving you in a required format. You're not doing accounting in the accounting software. So it's still manual and it's outside and there is no audit trail.
So in this case, suggestible would be they do the accounting on the regular basis if they have a software with the audit trail enabled. That would be a better way of approaching this.
Yeah, two approaches. One, you maintain it as is, right? At the end of the year, you put it in a software, create the required statements. However, when the auditor reports it, the statement of fact can be mentioned. And you're using the accounting software only to get it in the required formats and not to maintain the books of accounts, right?
Yes.
Yeah. The second one is if the client can afford a software, it is better to have it implemented immediately and start using the accounting software for all the transactions.
What if the auditor, after verifying this, I think
it's covered, yeah.
There are 10 actually on Slido. There are a lot of questions which.
Yeah. So I'm just going through that. I'll share my screen again so that everybody can see it and we can.
We just have one more question, sir. Here, can we just take this off so that?
Yes.
There are this thing. Different places place accounting, then difference place accounting, then how to validate the source documents. In general, the management will share the data and submit the bank statement to record account records. In this case, how to validate the ineffective manner? I think they're trying to say that they receive from management, they receive data and bank statements, and how do we validate means the source?
So here again, the discussion comes back to comes back to, are we doing the accounting only for the ease of keeping it in a particular format, or the intent is to record each and every transaction in the accounting software. If the intent is only to facilitate maintaining a particular format, then it's better to have a statement telling that it's a manual book. Manually, we are maintaining the books of accounts.
Yeah. And so we have one more question. If accounting is not done on day-to-day basis, that is, they do once in a week or 15 days, what care need to be taken?
Here also, if the accounting software is available, it's good to have it done on a day-to-day basis.
Yes, yes.
If it is
better
not,
to be live.
Yeah, better to be live.
Yeah.
Because you will have a transaction which has taken place today, but you would have accounted it after 15 days, and then the audit trail would say that there is a delay of 15 days in accounting the transaction.
Right.
Yeah.
So there's one more question. Generally, we import a lot of data through Excel sheet into our software, and many of the items, they sit in suspense account till we post them to correct account. So is it a bad practice, or it is okay to have such practice?
So the first thing is when we import the transactions, the activity of importing has to be logged in the system, which is who has imported, what time he has imported, and what date he or she has imported into the system. That's the first audit trail. Then the system will also tell where these entries or transactions are sitting. And subsequently, when each of the transaction is posted in the accounting ERP, there is a audit trail that is created. So if all of this is enabled, then we are compliant with the requirements.
Sure, sir.
Irrespective of which account it sits, it does not matter. But the trail of who has uploaded it, what time, date, and subsequently there is an individual accountant who goes and reviews all the transaction and posts it to respective accounts, GLs or sub GLs or various accounts. All that has to be logged as audit trails.
So, sir, we have to just report on whether audit trail has been maintained or not, or also take action based on the audit trail. Do we have to really get into the entire audit trail and then report on that?
So these
report
are the
on transactions.
Yeah, so these are the 4 things that needs to be reported: whether the audit trail is configurable, whether the audit trail feature has operated throughout the year, if all transactions are covered within the audit trail feature, and whether the audit trail is preserved or not. We just can't look at the audit trail, but we'll have to look at the little bit more in detail, which will require a little bit of IT specialty on how the audit trail is can be enabled, disabled, and whether all transactions have been covered. When we say all transaction, the transactions are here: monies received, receipts and expenditures, sales and purchases, assets and liabilities, items of cost.
So someone is asking, do we really need to tie up with IT specialists, especially the smaller companies?
Not required. You can always get a representation from the accounting software provider whether they are complying with the requirements of this particular regulation, right? And they typically would give a representation that can be used to comment on the adequacy. In addition to that, what capabilities that we have, like when I'm posting a transaction, we can do sample testing to see whether the username, user date, and time has been captured for various types of transaction. That can be an additional audit check that can be performed when we are doing the regular transaction testing. Between these two, it would be sufficient to give the results, audit results.
Any more questions?
I think on the Slido, there are a lot of questions.
Yeah, Slido, I've just shared my screen. We'll cover. What if company having no business transactions, only some expenses needs to be booked? I think we answered this.
We have answered.
Yeah, as long as there is a log of entries, there is no bar on backdated entries, as long as one justifies the reason. Example, bank charges on month end, that is fine. Is this audit trail to be activated in all softwares? We have discussed that. Only accounting softwares where the 5 transactions which define books of accounts, that needs to be, audit trail needs to be enabled only for that. In a small SME company, using Tally Prime with built-in audit trail feature, how the auditor ensures that there is no infringement, disablement of the audit log. So primarily, we need to look at the users who have access to enable or disable the audit feature and whether that user has exercised the right to disable the audit log. And when they disable, even disabling the audit log should get tracked as a audit trail feature. Okay, what are the consequences of non-compliance? Typically, it becomes a qualified audit report, depending on the materiality for the period for which non-compliances have occurred. So that's the consequence. What in a company if the accountant is punching transactions probably 10 days beyond? Okay, this we discussed. Books of accounts are to be maintained in of the company if the accounts are also removed. Okay, this we discussed. This reporting requirement is only to verify the company has appropriate audit trail in place or reporting on the deficiency of internal control. So the 11G is primarily on audit trail and not on the overall internal control. But when we are looking at the audit trail, it is good to advocate the clients on having a good internal control around the audit trail also. No, accounting software need not be owned by the company. Should payroll calculations be reported on by the auditor? If the payroll is processed using the accounting software, yes. But if it is only a accounting entry that is passed and payroll is processed in Excel sheet, the matter of fact that payroll is manual needs to be reported, and the audit software should have the audit trail. Yeah. Okay. This is taken note. Yeah. Can you please repeat the statement of fact for a company where accounts are updated on a monthly basis? Yeah. So here the question is, do we need to have the accounting done on a monthly basis or maintain it manually throughout the audit period, throughout the financial year, and report it as a statement of fact in against the Rule 11G clause in the audit report? Yeah. Anything?
So there is one more question. If 90% of the accounts is fine and there are minor irregularities, what should be reported?
So again, we need to say that the overall audit feature has been enabled. However, on these are the 3 or 4 exceptions that have been noted. So that needs to be called out. The exact wordings or the recommended wordings are there in the ICAI implementation guidance note. For each scenario, there is a recommended language that the auditor can use. In case the audit trail is not enabled, in case certain transaction it is not enabled or it was disabled for a certain period, the recommended wordings are there in the ICAI implementation guidance.
I think we have covered all the questions.
Even the chat box, the questions have been covered. And I think on the Slido, also the questions are covered now.
Yeah.
I would like to thank the speaker for the elaborate discussion and insights he took us on. And just a small takeaway from this session, making a specific assertion in the audit report, configure the audit trail, enable and operate throughout the year. Means this audit trail feature should be enabled throughout the year. It should not be disabled or enabled. It should be enabled throughout the year, and it should be in operation for the throughout the year. All transactions have to be covered, and we have to preserve as per statutory requirement. And two more insights what I took from the takeaway from this session was this is applicable to Section 8 and foreign companies also. So and wonderful session, sir, and very happy to hear from you and understand the subject so well. And I'm sure even the audience have had a lot of knowledge share from this session. And I would like to thank Anup sir. I would like to thank KSCAA for organizing this session, and the technical team and all the participants for getting into the new mode of Slido app. I think this was the first time I actually got a chance to do something like this, and it makes the interaction very lively, and people are able to post their questions online. And we had around 90 plus attendees for the session, and that's a good number because everybody is getting the flavor of getting the knowledge on such an important topic. And wonderful session, sir. And I would like to close the session if everybody's fine with it. And I think the session actually was planned from 5 to 5:45, but with the question answers and all whatever deliberations and your insights, I think we have reached almost 6 o'clock and plus times. 6:10. So that is a good response. Thank you all for attending the session. Thank you.
Yeah.
Thank you.
Thank you so much, Bhavita ma'am and KSCCA, for giving me the opportunity to share whatever knowledge and experience that I had on the topic. If there are any further questions on this topic, I'm happy to answer those over an email. You can share my email, which I've given to the participants, so that we can have a very collaborative discussion around the topic and enable them adhering to the requirements. More than adhering, it is to do with the mindset, where we need to become the torchbearers of change and bring in more accountability and transparency through this particular regulation. That's what I wanted to say. Thank you everyone for your patient listening and for contributing with your questions. With this, even my knowledge and the insights that I have about this topic has enhanced. So thank you everyone for staying back and listening to all that we had to share. I'm very grateful and appreciative of all you do for the profession. Thank you.
So the participants can reach to Anup Thomas on anup.thomas@in.gt.com. I've typed this in the chat box. Thank you, sir.
It is in.gt.com.
In.gt.com.
Yeah.
So thank you for the wonderful session, sir.
Thank you
all the participants.
Thank you. Have a nice evening. Thank you, everyone.
Thank you.
Sir.
Thank you all. Good evening. Now we close the session. Thank you so much.
Thank you.